Jonathan Golub, what would you do if they ended quarterly earnings?
Well, it's a silly idea, and Jamie, and frankly, Jamie Dimon knows better. I mean, the reason that banks report immediately after the quarter is because they know what's going on every single second, and he is a guy who wants transparency, he wants information, he wants it now. And if you're a shareholder, to have less information, Jamie Dimon would never want to invest in a business like that.
We've got to draw a distinction though between what Jamie Dimon has pushed for, which is the end of guidance, and the end of earnings, which is what we're talking about this morning. Have we got two issues kind of folded over into one thing at the moment?
Okay, so if a company is going to report quarterly, then you're telling me at the beginning of the year they can't say, here's how we see our business. So they can't talk about their business prospects, but they can only tell you what they've done. They can't tell you that they're planning to invest in something. You have to find out after the fact. I mean, again, I can't imagine that Jamie Dimon or Warren Buffett wouldn't want that information. The fact that they're saying it. Now, there's a difference between that and smart governance. Businesses need to manage people so that they align incentives, and if it's a governance issue, that's not the same as a reporting
We can talk about that in a moment. What's the experience elsewhere, Romaine?
Well, the experience elsewhere is that would lead to a lot more volatility. Look, you have a market that's predicated on forward guidance. I mean, the whole adage about the market is that you're paying for the dollar that you're going to get tomorrow, not for the dollar that they're making today. And if they're going to move to a system that's going to provide investors with less information, I'm not sure what that's going to do for the speculative side of this market, but I would be a little wary.
Ed Yardeni, if you ended quarterly earnings and quarterly guidance, would any of these companies boost hiring more than they otherwise would?
No, I think the whole idea is cockamamie, if I may be blunt about it. Transparency, more information is to be welcome. And this idea of short-termism that's been floating around for a long time just doesn't jibe with the facts. I mean, the idea that companies have been taking all their profits and just buying back shares and paying out dividends and spending nothing on their employees and capital spending is just not right. I mean, it's not that it's not right, it's wrong. I mean, the data shows that capital spending has actually been fairly normal. And besides, so much of capital spending is technology-based that I don't think you can even compare it anymore.
I think my central problem with all of this is about short-termism, fine, but this is about CEOs who have a chairman role as well and want more control, isn't it, Jonathan? Isn't that what this comes down to?
Well, listen, nobody likes to be measured. You know, I don't want an annual review. Teachers unions fight against testing students. You know, and CEOs would rather be evaluated less frequently. But transparency is good. This is not going to. This is a story for the minute. It's not going to be an issue in 6 months from now. It's not going to.
Well, unless the SEC does the study and decides that you don't have to report quarterly anymore, Jonathan.
Yeah, but like you said, there's just this isn't what shareholders want. This doesn't benefit the American public. I just think it's dead on arrival.